Hello and welcome to Getting Learnt by Jake and Hasty. Today we will be talking about a new IPO being listed called ALF.
When you see a company like this, you know, they're going to the public markets for a small amount, like $18 million, right?
Yeah.
That means that they couldn't find private investors to give them $18 million.
Wow, okay.
They're going to the public markets because it's almost like, okay, we're going to go find some suckers that like to trade penny stocks that are going to give us the $18 million.
Yeah.
And usually, you know, the reasons, like if it was a good opportunity to make money, again, there's a lot of private equity companies out there. There's a lot of people that are usually willing to invest in a company like this if they have good management and if they have good growth potential for the future.
Click the link I just sent you, bro. I'm looking at their how much they had unaudited in their cash. They said they had 12 million, and then when they got audited, they only had 8,000.
Oh shit. Wait, really?
Yeah.
Enemy spotted.
Yeah. See, I mean, that's a bit of a red flag. That's a bit of a red flag, right?
Okay.
Like they have 12 million in assets, but they actually have 1.8 million. You know what I mean? Like,
Yeah.
see, these are the types of things that might give educated investors that have a lot of experience pause, right? They might be like, wait a minute, maybe this isn't the best. People that would dig in and look at these numbers, those are the private investors, right? But you go to the public market, how many people do you know that just will buy and sell any like penny stock or whatever, just cheap stock, and just looking at the idea of the company and just looking at what they're talking about with their AI and their technology and this and that or whatever, they never bother going in and looking at their actual numbers. Those people might still give them their $18 million, right? Which is why you see so many of these like penny stocks that are just absolute shit companies. They look good on paper if you look at their website, and if you read their like marketing materials about their next like cool product or whatever, they sound awesome, but they're very poorly managed, or they have shady accounting practices, or some other reason that actual investors and private equity companies passed up on them, right? So yeah, man, and it's almost like, I don't know, it's almost like a loophole, like the way like these companies are able to just like take people's money and like rip them off, and in some cases just flat out like blatantly like lie to get people to like give them the money. And look, and this is also not to say, look, some penny stocks, like sometimes there are legitimate reasons for a company to go to the public markets because they can't raise money privately. And so, like maybe it is a legitimate company and maybe they will, continue to grow and be successful. And
Are you sure about that?
Their stock will rise and they'll eventually get uplisted to one of the larger exchanges. I mean, that does happen all the time as well. Sometimes it's like a total shit company, right, that decides to go public, but for whatever reason, either some like crazy news story or because of they become a meme or some social media, whatever it is, their stock goes way fucking up anyways, even though they're a shit company.
Bro, look at one of these things. Management says it will use the net proceeds from the IPO as follows. We currently intend to use the net proceeds from this offering together with our existing cash to repay certain outstanding indebtedness in an amount of $2.6 million plus accrued interest under a loan from Lee Aerospace, $2.8 million, plus accrued and unpaid interest on any amounts advanced under 3 bridge loan agreements between us. Lee Aerospace, our CEO, our CFO, our CTO, Peter Bordes, Rachel Pereira, the wife of our CEO, and 3 unaffiliated investors, up to $950,000 to acquire the balance of any of our Alphi-enabled tablets acquired by Lee Aerospace on our behalf that have not been acquired with the proceeds of the bridge loan. And the remaining amounts for product launch, blah, 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 blah. But general corporate purposes, including working capital, business development, sales and marketing activities, and capital expenditures.
They're going public to raise money to pay off a debt. And like the money that they're raising from the IPO isn't going to help the business at all. It's basically going straight to the CEO's pocket. Like that type of shit happens. They're unaudited 855,000 in liabilities, but their actual 6 million in liabilities, right? So they have 1.8 million in assets and 6.4 million in liabilities. This is why no actual investor wants to give them any money to raise money to pay this shit off, right? They have a $4.5 million deficit. This company's going to be bankrupt very soon.
Okay. The company's financials show no revenue and significant operating expenses, as the firm has primarily been in development and pilot testing phases to date. I don't think there's a market for this.
It's speculative and involves a high degree of risk, including the risk of a loss of your entire investment. You should carefully consider the following. Dude, I love reading the risk factors. A lot of things are like, I would say more than 90% of penny stock companies' financial statements look very similar to this in different ways, right?
Yeah.
Most of them look like this. They're just dog shit companies, but nobody bothers going in. I don't know if, look, the financial statements are not written in a foreign language, right? Like yes, there are some, you know, you need more than, you know, probably an elementary school education in order to like, you know, be able to comprehend what's happening in there, but you don't need a fucking MBA. These are documents required by the government. If they're going to go public, they have to file these. And look, not only do they have to file them, they get in a fuckload of trouble if they lie.
Yeah.
Which is why you're going to see a lot of shit in here that's not quite, you know, super.
No, they tell you the truth. Look at this part right
So-
here. It's Kingswood Capital Markets. The people who put out this IPO have generated an average return in the last 12 months of negative 26%. So they're just doing terrible. And another thing is it says it's highly unusual for a non-life science firm to attempt an IPO on zero revenue.
Yeah, you know, but look, what's crazy is like, I bet you could go on like stock twits and like Twitter and like, I don't know, wherever you heard about this company in like a positive way, you know what I mean? And there's always going to be other people out there that like, there are some people that are just flat out like they know it's garbage and they're just trying to like take people's money. I think there's like a lot of people that, you know, could be like executives of that company just trying to get people to fucking buy it, even though it's dog shit.
Yeah.
And then there's people that are just legitimately don't take the 10 minutes, you know, to do the research to see that it's like a dog shit company. Right. And this is why like so many people lose money on like penny stocks and shit. And like, if a stock gets enough attention, it doesn't matter that it's absolute dog shit. It can still skyrocket.
Probably that rich maker. I was getting shilled on Instagram today saying, it's time to get out of Doge and join Wiener. And it's like, oh, come on. Really? That's going to get people?
If you guys were interested in anything we talked about, please give us a like. It really helps us out, as well as a subscribe. And we will be dishing out more content to you very soon. Thank you guys for tuning in. Bye-bye.